Now we'll talk about the next and important option Greeks, that is theta, and everyone is interested to know about the theta because theta is the reason where, because of that, option writers wants to be in the market. Theta is the reason which is giving the threat to the option buyer. Those who are buying the option, they believe that their investment is limited, the risk is limited to the premium which you are paying, but your reward is unlimited. But only threat is the theta. The market doesn't move or remains there or remains sideways or slightly moves up, your option premium is not likely to move up because your option theta will hurt more compared to the change in the underlying price itself if that is moving slightly. So what is the theta? Theta is all about change in option premium because of change in time to expiry. One need to understand that theta comes into the points, while vega comes into the percentage term. So theta is a measure of an option sensitivity to time decay. More the time for the expiry, higher will be the theta. Lesser the time for expiry, lesser will be theta. As the time reduces, the option theta works, and theta always comes into the negative sign because theta is always decreases. Right now, let's say if the price of a strike is 100 rupees, if market remains there, everything remains there. Next day, your premium will decline by a few points. That is because of the theta. Because now 1 day less compared to the previous day is there in the end of the options buyer for the maturity, and that's why there is 1 day less probability for that options to get into the money in the market. So it is the change in option price given a 1 day decrease in the time to expiry. Other things being equal, option tend to lose the time value each day throughout their life. This is due to the fact that uncertainty element in the price decreases. So as I mentioned earlier, time decay is the one thing that is permanent. Time has to go. There is the fact of the life, and also there is a fact for the options. If you have bought some options and market is there, your premium has to decline. So this is how exactly the property of the theta works. Look at the theta decay. This is the 9-month cycle of an options. Given an example, as you go towards expiry, your theta value eats the entire premium, and you must be knowing that option premium is all about the intrinsic value and the time value, and at the time of expiry only intrinsic value remains, and all the in the money options are having intrinsic value, and there will be no value for in the money and out of the money strikes on the day of expiry, on the time of expiry at 3:30 if you are talking about the Indian markets. You must have noticed that on expiry day, many options premium remains 0 to 0.5 because the time value goes to 0 and they are not having intrinsic value because they are at the money or out of the money strikes of that particular underlying assets. So this is the symbol of the theta. Theta is decay in options price every day as the expiration get nearer. If you ask to option buyer what is the wish, they want the time to remain same. If you ask the option writers what is your wish list, they want expiry to come immediately after the previous expiry. So they're just looking the time to just collapse or time to decay, and they are looking for immediate expiry whenever they are selling the options, but that is not the reality. And you must have seen the option premium keeps on changing because of the many factors, and that is why we are talking about the option Greeks. And we already discussed about the delta, we discussed about the gamma, and now we have discussed about the theta.
Register for our free webinar. Download our app today. Link in description.